people, and I know you have some wisdom to share to help people navigate what's going on. And I want to thank you. You've been taking a ton of heat since last year at the peak when you're calling for that 20K. Everybody thought you were crazy, insane. And, we had that debate. I didn't think we would break that $30,000 level very easily, which it's been taking a while since the beginning of the year to crack that level. And you've been, holding strong on that 20K. So what are you looking at?
Yeah. So, I mean, number one is this is what happens in bear markets. And what I mean by that is that, we saw the Terra Luna situation. We saw the UST collapse, anything that's not made to be on a firm foundation. Ultimately, in bear markets, it's shown to be faulty, right? So now we're seeing Celsius. I think they're not allowing withdrawals right now, which is sending shockwaves. I mean, that's the equivalent in the crypto space of in the financial system. If a bank said, "Hey, you can't withdraw your money," I mean, that is not a good thing.
Well, here's a bigger one. So the latest shoe to drop is Binance. Binance now has locked up withdrawals and not allowing people to take their Bitcoin off the exchange.
Yeah, the one positive, and again, this could change, but the one positive I heard is that it was just based on some sort of glitch and that within 30 minutes, supposedly it was going to be fixed. If that's the case, that would be a positive. If it's not, then you're seeing Bitcoin going much, much lower. I mean, if this is an isolated Celsius incident, that's one thing. If it becomes something that many of these other crypto brokers have, then that's really, really bad. But I will tell you this. What we're seeing today in the price action is what I would consider blood in the crypto streets, which is just the same as blood in the Wall Street, kind of Wall Street period. This is where I start saying, okay, for a short-term bounce, it is starting to be likely. And again, it's scary, but you have to just kind of keep out the emotion and focus on the charts. And I'll show you here. Let me bring up the charts and take a look.
Yeah, and on that note, what's really interesting, so, there are a few people out there still calling for all-time highs and reversals and melt-ups and things like that. The thing to look at on these bounces, you get tremendous bounces in bear markets, and you can go and look at previous bear markets in crypto as well as traditional markets. You're going to get these bounces, but they never go past the previous highs. They generally bounce and maybe test the bottoms of where we came from. So, that's something to just think about on these bounces.
Yeah, absolutely. 100%. And what you can see here is that there's this little interim support right over here at around 23,000 or so. And that's kind of what we've been dangling right on top of. So that's your short-term support on Bitcoin. I ultimately still am holding strong that I think at the high end of a target, you're talking about this 20,000 marker here. So I still think we're going there. But again, generally, you don't go straight to these levels. It's very rare to see a collapse from where we were, at 32,000 or 31,000 a few days ago or a week ago down to 20,000 that quickly. Usually you get to a level, you bounce a little bit, then you flush again. Ultimately, I still think that we could go as low as 12,000. 12,000 is this pivot going back to 2019. One of the reasons why I think you could go that low, there's actually a few. Number one is it's a measured move. So if you take this distance from this high to this low, which was basically a straight shot down, and then you do a measured move, that same distance from here, let me zoom out, from here, it takes you down to 12,000. This would be the same distance repeating, which again, in technical analysis, it's called a measured move. It's some of the symmetry of stocks and charts in crypto. And then the other thing to keep in mind is that 12,000 also is the 80 to 85 correction move, which is a standard kind of Bitcoin crypto winter, right? So again, 20,000 is my high end. That's where I start kind of accumulating a hodl position where I plan to hold it for a little bit longer. But what I'll do is I'll divide my ultimate max that I want to buy into about 5 portions. So let's just say for Pete's, for example's sake, it's $100,000. I would do 20,000 at 20,000. And then at maybe 17,000, another $20,000 worth, et cetera, all the way down. So again, there's lots of ways here. I'm still a long-term huge bull. This is kind of exactly what I was expecting. It's the .com flush out. You need to see 95% of cryptos honestly go away during this next 1 to 2 year period. It's why I've said so many times when I invest in cryptos, I generally only invest in the top 20 because the top 20 hopefully will still be around to tell the tale, just like Amazon back in the .coms. Obviously, that one flourished afterwards. But I mean, it is nuts out there. There's no doubt about it. It is painfully nutty out there. And investors, don't use leverage. I mean, that's just the bottom line. You know, you use leverage in a bear market, you're going to get slaughtered. Notoriously, when I'm accumulating, like I did a little buying of Ethereum today, I put 4% additional in my portfolio of Ethereum. That's it. You know, so I do have about a 20% position in my portfolio of Ethereum here for a bounce.
Let's take a look at Ethereum too, because I've got some targets on that as well.
Yep,
and I think
absolutely.
we might see $700 on Ethereum here pretty soon.
Yeah. And Ethereum has broken down sharply, and really Ethereum is leading the drop. I mean, if you look at the relation to Bitcoin, Ethereum, this was your 2017 high, and it's already through that. Now, I do have some levels here.
I'm not seeing your chart.
Oh, I apologize. Let me bring that up here. And all right, so here's your Ethereum chart. And again, you can see how it's leading Bitcoin. It's already taken out the 2017 highs right here. I think you have a couple levels coming up. The big one for me is going to be this $800 level right here. That's going to be a very, very big support. So again, basically below 1,000, I really start to think that there's good value here if you can say a cryptocurrency has value. No one thought it would go here. I mean, we were almost at $5,000. So at $1,000, you're basically down 80% on Ethereum, and we're getting awfully close to that, trading at 1225 right now. So yes, it's nasty, but again, if you're someone that has that long-term vision and you're not using leverage and you're trying to build a long-term accumulation portfolio, then you start to nibble. You start to nibble just a little bit, and you kind of say, okay, listen, I understand that these positions could go down 50%. That's just the crypto market, right? Even from here. But if you have that view of long-term, then there's a lot more reward down the line on these good quality names.
Yeah, it's risk reward. And, you have to assume worst case scenario, even if it drops back to, March 2020 levels and previous cycle levels after 2019, you should come back at least to where we are. Are we going to get back to the previous all-time highs? Not without the Fed, not without a reversal. That's just not going to happen without where we came from in that, macroeconomic cycle, I don't believe. But definitely we can get back to these, levels that we came from, because we've seen them before. We saw that 2020 high again. That was in a bull, macro bull market cycle. And, and on your, point about liquidations and leverage, that's a lot of what's going on now. So, now that we've broken that $30,000 level and we've broken this previous all-time high on Ethereum, that's triggering liquidations, not just leverage traders, but people who have borrowed money, like a Michael Saylor, that have leveraged their holdings to buy more, leveraged their businesses to buy more, things like that. There's levels that are going to trigger liquidations, and the lower the price goes, they have to put up double the collateral or liquidate double the collateral to pay it back.
Right.
So you're starting to see a lot of those things happen, and then, structural fractures in the market. So this is where Warren Buffett will say, now we see who's been swimming naked, right?
That's right. That's right. And I mean, and I'm not going to compare what's going on with Celsius or UST necessarily to like a Bernie Madoff, but that's when when Bernie Madoff was discovered was when the bear market in 2008 began, right? Because he could no longer just fabricate the X amount of gains that he was on paper, because people were saying, oh my goodness, the markets are crashing, I need to pull money out. Well, guess what? Celsius is finding the same thing right now. They've stopped allowing that. So, I mean, really bear markets expose the weak hands or the fraudulent hands. And that's what you're starting to see. And it makes a lot of sense. I mean, the crypto market is probably one of the shadiest unregulated markets out there. So in these type of environments, those bad areas are going to get exposed.